let's talk about gold prices now, which have seen a bit of a support coming in today. But we have seen the data come in slightly on the weaker side as far as the World Gold Council numbers concerned. In a report released today, the world global demand has seen a decline of nearly 5%. The jewelry demand also is down 6% into the markets in the first quarter of 2012. In India, the consumer demand slid by nearly 29% to 207 tons, while jewelry demand declined 19% to 152 tons. That's the numbers coming in for the first quarter of 2012 from World Gold Council. For more on commodities, we are now joined by Chirag Kabani. He's technical analyst, AskChirag.com, and Vijay Bhamwani is author, CEO, BSPLindia.com. Thank you, gentlemen. Vijay, let me start with you on gold first. While the demand clearly has seen a bit of a decline, we have seen the prices at least come off their lows.
That's right, Manisha. Now, the critical level here is 28,400. Now, unless the bulls manage to keep gold above 28,400, they should be treated as a tradable bounce and a short covering based rally. The dynamics can change in the absolute near term above 28,400, in which case you can see another percent and a quarter move from here. But I would be watching out for open interest and volume expansion on the upside above 28,400. Only then would I feel comfortable trying to get onto the long side, failing which I think I would treat it as a short blip up. That's all.
Chirag, how are you looking at the gold price? Today, of course, seems to be a strong day. International prices are up, Indian prices up more than 1%. Are you buying at these current levels?
Not at the current levels, but I would be looking to buy on any dips on MCX around till 27,600 levels with a stop below 27,450 levels. The important thing over here to watch is the US dollar index is now at a critical junction of 81.60. If it crosses above 82, then gold's slide would continue, but a failure from current levels would help the gold prices improve. Technically, 1574 on COMEX would be an important level. Once that is crossed, we could see a short covering rally till 1650 in the short to medium term.
Chirag, how about the silver prices? Because they also have seen a good rebound. I mean, do you think we could see sustainable buying onto that one?
Technically, a dead cat bounce is expected on silver. Silver is quite oversold. We saw it testing the 5-month lows around at $26.80 again, and a sharp reversal has come off the lows. If we see sustained trading at current levels and a crossover about $28 in the short term, then the prices could retest the level of 31.50, which I think so is quite possible.
Vijay, how about the energy space? Because after the decline that we have seen in much part of the May, yesterday was a rebound, 1.5% of gains coming in. Today, yet again, you've seen 0.5% of a run-up come in. Is it what we are hearing from Europe or the expectation of a better data today in US?
Improved data can actually see a short-term, an absolute short-term bear squeeze, because you have seen crude come off pretty steeply. In terms of MCX levels, I would watch the 5,020 levels fairly keenly. Unless it breaks that pretty violently, I think there is a possibility that there could be a dead cat bounce in crude oil and the WTI category. But what I did talk about a fortnight ago on natural gas, that seems to imbibe a little more confidence in terms of the relative performance vis-a-vis crude oil. I think natural gas had a sustained decline, and it could actually be a dark horse or maybe even a wild card to test 155 to 158 levels.
Chirag, how are you looking at the energy space? Because we've seen nearly 11% of decline coming in for May and then the rebound yesterday and today. Do you think it's holding?
See, after the sharp sell-off in the crude prices from $98 to $92, we have not seen any bottoming formation. So any bounce would be treated as a sell-on rise. People would be looking to add on to their shorts around at 93.60 and 95.8 levels on the NYMEX, which would be coinciding around at 51.80 on the MCX. One could look to shorts around at those levels with stop loss above 5240 on closing basis. For downside, again target still 4950. And talking about natural gas is completely moving with correlation to US dollar index. If you compare the last 1 month chart, whenever the dollar index rises, natural gas keeps on rising. So if a US dollar index crosses 82 in the short term, further up move would continue in natural gas prices. If a reversal comes in dollar index, natural gas again would start sliding down, and it is extremely overbought in the short term. We have seen a move from 100 to 145. So buying at this levels is not suggestible. One should wait for clear dips onto it.
All right, so buy on dips, but natural gas is looking like a clear winner, up nearly or more than 2% at this point. Vijay, how about the base metal space? Because you have been bullish on aluminum and it has seen a good turnaround as well. Do you think the rally could continue on that one?
I think so, yes. Any kind of positive economic data will see aluminium lead the way up, because in the period of decline over the last 2 to 3 weeks, nickel has fallen, copper has fallen, but aluminium has been holding its ground. I would basically continue my bullish call of yesterday and buy close to the 109 levels. I would hold that long with the stop loss at 108, and I would expect to book profits at 110.5. And in the metal space, I think I would kind of zero in my sights on aluminium rather than go on to spread my bets thin across too many counters.
How about you, Chirag? How are you playing this space right now? Nickel, of course, has declined to 5-month lows, and we've seen copper, though, trade quite well today, up nearly a percentage point right now.
See, if we look at the nickel MCX chart, it's been trading in a range of 915 on the downside, 950 on the upside. I would continue to play that range. Any dips to 915, 918 would be a good buy with stop loss below 904. For again upside first target of 942. If that is crossed, 960 also cannot be ruled out. Copper is quite oversold. At LME, it is finding supports around at 7,800 levels, which was the previous month's low. We could see a small short-term bounce in copper up to 8150 on LME. So on MCX, I would suggest traders to go long around at 420, 421 zone, with stops below 417 for short-term target of 427. If 427 is taken out, 432 cannot be ruled out.